Welcome back to another episode of My Lawyer Next Door. Here today to talk about what is really happening in the Toronto or GTA housing market and how is Canada's new federal budget announcement going to affect the housing market and first-time homebuyers in general. I brought on two special guests, two really good friends of mine, to talk about this. So here we have Mr. Darshan Sritharan. He's from iConnect Mortgages. He's been in the game for a very long time. Seasoned not only in the mortgages but also with his own personal real estate portfolio. On my other side, we have Lucky Paramaguru from Royal LePage Ignite Realty, a very, very young and bright realtor, and he's been very, very active. If you look at either of his social media accounts, their pages and their following will even speak for themselves. So first, before we get into the speeches and the talks and questions, I want to have each one of you introduce yourselves and tell us, what makes you special.
Of course. I'm Darshan Sritharan. Like you said, I'm with iConnect Mortgages, part of the Dominion Lending Group. I've been a mortgage agent for about 5 years, and in the industry for almost 10 years. I focus primarily on purchases, refinances, privates, new to Canada, and I'm hoping to share some of my knowledge here with you guys today.
Yeah, my name is Lucky Paramaguru from Royal LePage Ignite. A few things about me. Kind of got into real estate as an agent right now for almost 2 years. But prior to that, I was actually always a real estate investor. Got into real estate investing, helping with my parents and just buying investment properties. And then I think I kind of just transitioned to thereafter, just to kind of I understand the investment part, but let's talk about the real estate part. And then now I just use both of those tools and just help my clients, and I create content on social media as well.
So guys, we'll leave links to their social media pages below. So please feel free to check them out, and they're really, really great resources. All right, so let's get into it. Context: in March of 2020, the Bank of Canada, after a very long time, finally raised its base interest rate by a quarter basis points, so by 0.25%. The prime rate of Canada prior to that was 2.49%, and now is about 2.45. Sorry. Now it's at
2.7 now.
It's at 2.7. So now we have another rate hike coming out in April 2022, and all the predictions, everyone is saying that there is going to be a rate hike more likely than not. I think everyone is on board with that. But I think the new news is you could have an oversized rate hike, which means either double the basis points or even greater. So for our viewers, that means instead of having a normal hike of 0.25 basis points or 25 basis points, you might have 50 or 75 or even 100 basis points. And I think that leads us to our question or our biggest concern or topic is, how will this affect the real estate market in the GTA, because we're all homeowners, right? So we're going to talk from the perspective of homeowners, then we'll talk from the perspective of prospective buyers who want to come into the market. So we cover both parties. So as you guys, from your perspective and your perspective, both on the personal and the professional side, what do you think a rate hike of 25 basis points or even an oversized one would do to the market?
So right now, I already see a shift in the market. So prior to this whole rate increase, we were seeing home selling in days. Offer presentation would be 5 to 20 offers for a house. But now I'm actually seeing a slowdown where we're actually getting 1 or 2 offers. Some houses are not getting any offers. So what's happening is, I think it's just a fear factor. A lot of people are just concerned, okay, you know what? Let me just step back. So that's why we're seeing a lot of now inventory is actually increasing compared to before. We had very low inventory. Inventory is increasing gradually. And I think what's going to happen is we're slowly going into more of a balanced market, and houses are going to be sold for the price that's listed for. And it could go into, especially with another increase, like you said, in April, we might see another shift, and it can go into a buyer's market. But it's too hard to still say, because the market is still, prices are still pretty good overall. I'm sure Darshan can talk more about the rates and what his predictions would be as well.
Yeah, so I think the way that this is going to, first of all, affect the rates is when the Bank of Canada does increase their benchmark rate, you're going to see all the banks start to increase their prime rate.
Right.
So right now, like Vidhu mentioned, prime rate is at about 2.7. So generally, if you see a quarter hike, if the Bank of Canada announces a quarter hike, you'll see prime rate jump by a quarter. If a half, then it's going to jump by a half. Now, I think with the last hike, people started to get a little antsy and maybe not putting in offers just left, right,
That's
and
what's
center.
kind of happening. Yeah.
And I think if there is a half a percent jump, I think it's going to really scare people.
Yeah.
Again, it's not something that we can predict because this last 2-3 years, I don't think we would have ever predicted what happened. So
Yeah, well, we've had crazy amounts of returns. Like, coming from a lawyer's perspective, I'm kind of like, as an investor or a real estate owner, I'm maybe not as pleased.
Yeah, for sure.
Because the money factor is not as great. But as from a legal perspective, I'm so much more relieved that buyers will have some sort of protection.
Yeah.
Because prior to this, for the last couple of years, there's like sight unseen, no financing condition, no appraisal condition, no home inspection. Sellers could demand whatever the hell they wanted, and buyers are taking on the biggest purchase of their life and have no protection, right? So,
It's true.
yeah. So I'm really happy that the buyers will have it. It'll sort of balance the market. Hopefully, it'll take a reprieve. Eventually, I think on a long-term scale of like 10, 20, 30 years, I think this will be fine. Like this will be a blip, but at the same time, I'm happy for my clients to get protected, and it's good for us too. Like.
just to echo that, like you're right. The conversation is going from, hey, realtor, so there's not going to be a condition of financing to, oh, okay, yes, 5 days condition of financing, perfect, gives me time to get an approval. So
I agree.
yeah, I think you're right. I can see that shift happening.
Yeah.
Yeah. So to add on to both what you guys said, like I just actually had a client recently, purchased the property, everything is good, and then the appraisal just came through, and I'm not sure what happened because like at that time you're you're just like you're competing with 10, 20 people. You're just like, yeah, damn it, I'm just gonna put my best number and go in, right? But you don't really look at the comparables. And I always tell my client, listen, like this is what it's going for. Be prepared for appraisal. And now they have to pay extra 40 to 50K out of their own pocket, right? And these are the things that a lot of agents have to prepare their clients to be. Because in your case, and mortgage agents as well, like listen, like they can only do so much. They can't like you guys can't make the appraisal like hey, I want to be 40K more. Especially as rates go up, prices will eventually go down.
Yeah.
It's kind of
And a lot of lenders have already told their appraisers that, hey, we're not going for the most, or maybe we may not want top end market value.
Yes.
Like I know, like especially with some of the more risk, our lenders, like say C lenders, like Mix and stuff, their lending category, or appraisal criteria, is so much more conservative than let's say one of the big 5 banks. 100%. So people have to understand like the territory they're walking into, which and they have to have that extra cushion if they bought in February or even early March or January and they're closing now. Like there's going to be big shifts in the market.
Yeah, especially people who made purchases in January and February.
Oh man, those people are gonna definitely.
So we've already seen it at our firm. We've already seen a few appraisals not come through.
Yeah.
People have to scrounge for money now, and the problem becomes like not only the money part, but now you guys are kind of binding them because they're gonna be like, wait, where is this person gonna get the extra 50, 60K from?
Exactly.
Like you never showed me source of these funds and stuff.
Right.
Are they absorbing more debt? Can they even handle it? Which comes back to affect mortgage approval.
Exactly.
And then we're at the end of the stick, and we get shafted usually.
And it comes down to a blaming game.
Yeah,
right?
and it's like, and we hate that part. Like all of us, all of our industries are in it for the same reason, to to complete the deal, hand over the keys, and to make sure our client is satisfied. And that's why I hate people who will start blaming. I'm like, look, we're all on the same side. Like let's not pit against each other. So that takes us into like another thing. So with the federal budget coming out, there's been a lot of promises and a lot of things to help participants who have not been able to get into the market.
Right.
We could call these guys first-time home buyers or people who had to sell for some reason and they can't get back. There's been a lot of interesting programs that's been announced, and there's been a lot of creative wording is what I use on some programs. Basically, the federal government just rebranded a less known thing and made it sound better than it is. But so let's start with the stuff. Okay, this TFSA account. This is a game changer.
Right, it is.
So for first-time home buyers, I guess
I think this is really exciting. It sucks I'm not a first-time home buyer anymore, but I would definitely take advantage of it. So it's called a tax-free saving account for first-time home buyers. And essentially, you're able to put up to $40,000 into this account. And when you put in, I think it's $8,000 annually. And for the money that you put in, you do get a tax credit. So it kind of is like an RRSP. So when you put money in, you get a tax credit at the end of the year. Now, you could double, triple the money that's in that account. And when it's time to buy your first house, you can withdraw that money tax-free, not having to pay taxes on any of the income that was generated, which is, I think, huge.
Yeah,
huge. So that's one of the biggest things.
And like to add on to that, I think a lot of first-time home buyers, the biggest concern they always have, like, how do I save? Where do I start? This is a great tool that the government has employed right now, and by helping first-time home buyers, especially like who haven't don't know where like Gen Zs and millennials, like now this is your resource, right? And the benefit is like you don't have to pay back compared to like your RSP, which is another good compared to you pulling out. This is your own money, right? As long as you invest it correctly, like you were saying earlier, like we had that conversation. As long as you invest it properly, you can definitely use it for the right property.
Because I think at one point, like the difference between this to maximize the benefit of the TFSA versus savings account, for example, is your ability to take more risk and be rewarded and not have to pay the tax on it. But at the same time, you could get burned and you're stuck with whatever you have. But it gives people that option. People who want to take the risk and make it, they have the opportunity to make it. So I think that's a great program. I'll talk about one of the things that I think is just was a good resource, but it was a confusing resource. So they had this announcement that first-time homebuyer credits was doubled to $10,000. So like I actually had a closing today. First-time homebuyer, she calls me and she's like, "Hey, am I eligible for this?" And I'm like, "What do you mean?" She's like, "Oh, am I gonna get $10,000 off my purchase price or as a rebate?" And I'm like, no. I'm like, okay, let me dispel the myth around here. So the provincial government does not have the ability to regulate land transfer tax. That's a provincial thing, not a federal thing. So the federal government could only affect your income taxes and your tax returns. So right now, currently in the market, if you buy a house in 2021, when you do your taxes in 2022 as a first-time homebuyer, you would get a $5,000 tax credit. Effectively, that means you get $750 as a tax refund. So the dollars in your pocket were $750. What the government has said is, okay, that $750 or the $5,000 refund, the tax credit, we will double it. So we're going to give you a $10,000 credit. But effectively, that means from $750, you get a $1,500 refund. It's still better than nothing, and I still think it really helps first-time homebuyers who have so many expenses, like when they move in. At the same time, it was touted as this great new big thing, but really it was like, let's look at the dollars. If you told people that, hey, instead of getting $750 back, you're getting $1,500, I think the reaction would have been way different than saying, hey, you were getting $5,000, we're going to give you $10,000, right? But so I'm like, it's better than nothing, but let's really see what's going on. It doesn't affect your closing costs, and it's effective for anyone who bought a property in 2022. So when you do your 2022 taxes in 2023, you'll be able to get it. So that's a good part of it.
I have to add on to that. I think it's an educational component. It's so important. That's like when we do our deals, like, for example, like when I get a client, I'm like, Darshan, make sure you do the mortgage pre-approval. He'll make sure he'll run by the numbers and everything. And then right there, once we find a house, then I give it to you to make, and you also educate our clients. Like, we don't just like dive in, okay, we have a process, right? And when you follow that process, that's how you get deals in, and that's how like our clients are going to get the success in their transaction, right? And I think that's a lot of people have to understand, like educating yourself and understanding. Just because they're saying all these like incentives, you have to understand, does that apply to you? Yeah, and that's the biggest point, right?
I think it goes back to, there's always new policies and things coming out, and just like you said, it's just an education piece. So as long as we have that conversation with the client,
that's all it is.
Yeah.
All right, guys. So that was a great starting to the talk. So what we'll do is take a little break, and we're gonna come back, and we're gonna continue on with this chat. All right, guys. Welcome back to this segment of My Lawyer Next Door. Again, we have Mr. Darshan Sritharan from iConnect Mortgages and Lucky Paramaguru from Royal LePage Ignite Realty. All right. So, Lucky, tell us about along these announcements from the federal government, they said, oh, okay, we're gonna ban foreign home ownership for 2 years.
Yeah.
What does it really mean?
So, as you probably, many of you know, it is going to be an impact, but I don't think it's going to be a huge impact, even though it's all of Ontario. Because if you look at all the transactional history, foreign buyers is very small compared to mainly our main residents or who are buying. But foreign buyers have been a big increase in the last, I'll say, 3 years, from 2017. So it has definitely been an impact. So I definitely do see our market cooling down, but I don't think it'd be a much big difference on price. I think rates will have a bigger role in that compared to the foreign buyers. Like, everyone's always scared about foreign buyers, but like I've been doing so many offer presentations and I know agents from the same industry and like, is your client from China? No, it's from someone from here. It's not someone from China or Japan. It's usually local. Like, I probably came across 2 foreign buyers in my 2 years of history in the real estate industry. So we shouldn't be so intimidated by foreign buyers.
Yeah.
We should be. I think the biggest concern is just having a proper system, having a proper realtor, having a proper mortgage agent, a lawyer, and making sure that you have the right tools to get that transaction done.
Yeah, even for that, like the problem with what they announced is if you actually look at their exceptions.
Yeah.
So if you are a foreign buyer, but you're coming here and that house is what you intend to live in,
Yeah.
there's no foreign buyer.
Exactly.
So it's like there's so many loopholes to this.
Yeah.
And so it's like, or like what like a lot of people do is they send their child to study here, study
Exactly.
here.
And if they're a PR, they're fine. They can still buy. You know what I mean?
And or if you
Yeah,
buy
yeah.
alongside a PR,
Yeah.
no tax.
Yeah.
So it's like, is it really gonna happen?
There is legal loopholes, and that's why I don't feel like it'll be a big impact. But
No.
it definitely, like, I don't think it's going to really affect the prices, but I think it'll definitely affect the long-term game, because I think it's like I said, even though it's 2 years, I don't see it being a big impact.
What we need to realize, though, it is that fear factor.
That's what,
Yeah.
exactly
See,
what it is.
majority of these people who are refinancing their houses and buying multiple properties, they're not going to look into this announcement. They're going to look at the title of, articles online and even in the news, they're not going to go over what are the exemptions, right? So it's the fear of oh, no more foreign buyers, oh, rates are going up, I'm not going to buy.
Yeah.
Right, so
true.
I think just like you said, it may not be the foreign buyers that are raising the price, but I think when you look at every single thing, this kind of reminds me of 2 years ago, when rates started to go up and when the first foreign buyer tax came in and everyone stopped
And
buying.
that happened in
prices
2017. Yeah, that's what happened.
Yeah. So that's I think you're right to a certain degree, but I think the fear will kind of
100%.
No, I agree with that because my father's an HVAC and we have Chinese techs. All right, they've been with us for a long time. So they're like the 15%. Even with the 15%, they didn't care when they're about to lose 100% in China. For you to pay 15% more, which it was almost appreciating by 10 to 15% per year, they're like, you know what? Instead of buying today's price, we're just buying it tomorrow, like next year's price.
Yeah, exactly.
They didn't give a shit about the 15% taxes, to be honest, especially when they're escaping with the money out, because they're like, the government's going to take everything. So for us to lose 15% is way cheaper than doing other methods or like going through the black market. And we got something and we're going to make it back in a year or two. So for them, like, really didn't matter. For the ones who everyone is scared of, the ones with the big money, they don't care about the 15 or 20% now.
Yeah, and these foreign buyers are not buying residential family homes. They're buying bigger commercial buildings, like big properties, right?
So
And that's what a lot of people get scared. Is like, oh my god, I'm not gonna be able to buy this small townhouse. Like that's not.
So if you look at a lot of landowners who are selling land, let's say in Prince Edward County or in the Kawarthas, this only applies to homes. Doesn't apply to commercial and thing. If you look at the chain of ownership, they're going into the commercial market, into the land market, and flooding. For example, with the GTA, the old tax, Keswick, Georgina, Sutton is not part of the horseshoe. So you saw everyone flood into there. So you don't flood into the houses, they're just gonna go into the commercial space, it's just going to the land space. Yeah. So like they have other avenues to get their money into without these taxes. So that's fine. So here's a golden question. Would you recommend to your clients to buy, sell, hold? What's your recommendation?
So it depends on the client, right? I think that's what. If you're looking for an investment right now, you're just saying, okay, I want to buy something that's going to grow right now. I think maybe you want to pause for a little bit, see where the rates are going to go, because you might be able to buy it for a cheaper price. Yeah. But I always tell all my clients, never time the market, because if you look at, even if rates go up, prices go down, you still rather catch it on a lower rate because in the long term wise, you're still saving more money on a lower interest rate and a higher price compared to a low price with a high interest rate, because you're paying more into interest. Now, if you're looking to buy, like if you're looking to start and get into the industry, then just get into it. Maybe you can just figure. I mean, a condo is the right way to go. But even condos now, as many of you know, because we do see a decrease in the real estate market for the houses and townhouses. So when that happens, condos always go up. It's always one or the other, right? So that's what's happening right now, and I think condos are going up. So I think personally, if you're looking to get into real estate, a new development isn't too bad way to go, because it's going to take some time to finish. So at least by then, the next 2 years, rates might go down, and you might get something better.
You're building appreciation while
exactly.
you wait, right?
And
Worst case.
And you're not paying a mortgage for it, right?
Yeah.
You're just putting a deposit. That's it.
100%.
Yeah.
It's hard, like you said.
Yeah.
You don't want to time the market.
Yeah.
If I'm not buying any properties right now because I have a house to live in, and
Right.
I'm not gonna gamble in this market.
Exactly.
Now, if I didn't have a house to live in, I might start to get
I
ready.
think it's a good
because,
time. I think if a rate announcement comes and it goes higher, and you're able to shake some of these like sellers who may be scared or something, I think it's a great time as a first time home buyer or as a first home.
Yeah.
I think that's it's great in that sense because you're gonna get into the market.
Yeah.
So I'm on with you. So like one of the other things I want to really quickly touch up on is this assignment sales. Okay.
Yeah.
They're like the federal government made this huge they paraded that federal assignment sales. We're gonna really catch these flippers. We're gonna tax them. We're gonna do everything, but it's a bunch of bull crap. Okay. Because an assignment sale is you selling a contract.
Right.
Because you don't have a house yet. You have a contract to buy a house once it's complete, and these are the terms of that. So already, if you sell a contract, there's already business income. You were already getting taxed on it anyways.
Right.
Right? It's just people didn't know about it. It's another thing that they just relabeled. So now they're just coming out aggressively to like calm the people on one side of the political spectrum who are just coming after them for not controlling the housing market and everything.
Right.
Really, they're just going to do the same thing that everyone else did. Like, you're going to continue to tax it. It's the same way. They didn't change any of the rules for it. They just relabeled it.
And I think these are just tools for the government to use just to kind of cool down, to control the market. And I think that's what people don't realize. Like, the market isn't controlled by realtors or mortgage agents or lawyers. It's controlled by the government, right? And the economy and how many people are coming in, how many people are leaving. So I think these are just labels or just used as tools just to put that, like you were saying earlier, Darshan, that fear factor in. That's to say, oh, should I buy right now? Oh, maybe we should be careful right now. Just to put that caution, right? I think it all comes down to your financial portfolio. If you have the finances and you can pay it extra, then by all means. But if you know you're on you don't have that much and you're very tight, maybe you want to wait a little bit, right? It all depends on your financial portfolio. One thing people don't realize, location doesn't come back.
No.
Lot size doesn't come back.
Yeah.
These are things you can't buy later on.
No.
If there's a house that if you want to live in this really nice area with 100 frontage with 400 depth, you're not going to be able to buy that again.
No.
Like, those are you got to understand that waiting period. That could be the debt of you. That's what we don't realize.
Like, real estate is all about location.
Exactly, yeah.
All right, so we'll conclude with this one. All right, so as someone wants to buy, what are you recommending to your clients? Fixed, variable. This probably is the golden question.
So, I think there's not one right answer. It depends on who you are, what your goals are, and what you're trying to do with this property. If you're a first-time home buyer, you're getting approved right at the maximum, of your affordability, I would say go fix. Maybe not a 5-year fix, right? Because, as a first-time home buyer, maybe you're not buying your dream house. You're usually buying something smaller, something you can afford, something you get approved for. So maybe go on a 2-year, 3-year fix, because the last thing you want is to be on a variable and there's a rate hike. Some of the banks, your payments won't change, but the portions going towards your interest and principal will change. Right. Some banks, your payments will change, and a couple of quarter hikes, and you're paying $1,000 more than you want to. Yeah, now, if you're an investor, that's a completely different story. Right. I'm an investor, and none of my investment properties are on a fix. Everything's on a variable. Yeah. Even if some of the properties that I've been holding for 4 or 5 years, and the reason why is you never know what's going to happen in the market. You never know what's going to happen in your life. Last thing you want to do is be on a 5-year fix and in 1 year be, some sort of special circumstance comes up where you got to sell and you're stuck with not paying a $20,000, $30,000 penalty, right? And vice versa, if the rates do go up, you know what? Your interest on rental properties are right off. So if you're an investor, I would say stick with a variable. If you're scared about affordability, then go into a fix. Maybe it doesn't have to be a long-term fix, but it could be a shorter-term fix.
I think that was a great chat. We'll continue this on like different days and with different topics, but I think this is a really good introduction into these topics. So, thank you for everyone who watched. Thank you for staying tuned into My Lawyer Next Door. We will be bringing you more relevant, timely content like this. If there's any suggestions you may have, please feel free to put a comment below. Please click on the subscribe button and always press that bell button so you'll be notified of any new content that we produce for you. So thank you to Darshan Sritharan from iConnect Mortgages. Thank you to Lucky Paramaguru from Royal LePage Ignite.
Thank you so much.
We will put all their handles, social media handles, and everything in the caption below. So stay tuned, and we appreciate that you took your time out to watch us. Thank you.